This is Business Morning on Channels Television. Good morning and welcome to the program. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for joining us. Let's take a look at what's in the news. The federal government is partnering with the American multinational technology company, Microsoft Corporation, to speed up Nigeria's quest to achieve a digital economy. According to a joint statement by both parties, the initiative will center on connectivity, skills, and digital transformation across 6 regions in the country and provide over 27,000 new digital jobs. It adds that no less than 5 million Nigerians would benefit from a digital upskilling program over the next 3 years, and about 1,700 trainers will provide blended online and in-person training courses to youths and government employees. Microsoft explains that it will collaborate with local partners to design and implement cloud-based tools to further enable government's fights against corruption.
In the meantime, the need to establish a direct and effective engagement between small and medium enterprises and regulatory agencies would eliminate all forms of revenue leakages. That's according to the Lagos Chamber of Commerce and Industry. A statement by the Chamber says that a study carried out shows the need for ease of access to information for SMEs in order to address the gaps with officials of regulatory agencies. It adds that the survey shows that it is crucial for the full adoption of technology by the ministries, departments and agencies to drive efficiency and ensure transparency.
And on the oil market, prices added to overnight gains this morning, buoyed as more U.S. states eased lockdowns and the European Union sought to attract more travelers, which would help offset weakened fuel demand in India as COVID-19 cases soar. Brent crude futures rose 14 cents to $67.70 a barrel after climbing 1.2% on Monday. U.S. West Texas Intermediate crude futures also rose 14 cents to $64.63 a barrel after gaining 1.4% on Monday. Prices are being supported by the prospect of a pickup in fuel demand in the United States and Europe, as New York State, New Jersey, and Connecticut were set to ease pandemic curbs, and the European Union plan to open up to more foreign visitors who have been vaccinated. For further signs of rising U.S. oil demand, traders will be watching out for reports on crude and product stockpiles from the American Petroleum Institute later today and the U.S. Energy Information Administration on Wednesday. A weaker dollar, hit by unexpected slowdown in U.S. manufacturing growth, also helped shore up oil prices. The lower dollar makes oil more attractive to buyers holding other currencies.
Well, still on commodities, Bolande Abaje, one of the research analysts with Financial Derivatives Company, will be joining us to look at the latest trend on the commodities market space in a moment. Keep it here with us. This is Business Morning. Thank you very much for joining us on the show, Bolande. It's great to have you.
Thank you for having
me.
Good morning.
Welcome back from your holiday. That's the Workers' Day holiday. All right. Well, commodity super cycle,
yes,
booming, and your slide says the index gained 15% in 2021. You talked about the Kenya wheat up 17%, 2021-2022 market year, corn for July delivery up 3.9%. So what is this all about? And, what's stoking that?
So there's like a new phenomenon happening in the market that we have never seen or we hadn't seen in a while. We're seeing that the commodity prices, various commodities, we're seeing a hike in some of their prices. You mentioned the index that, we mentioned in the slides. And also the Bloomberg Commodity Index had gained a whopping 30% from June last year and up until this year, which is significant for many investors. A lot of investors are surprised. We hadn't seen this kind of, increase or upward trend in the commodity market space. And now it's attracting, a lot of investors. I think a decade ago, the trend was to invest in technology. That was, what most people focused on. But now most people are looking for other, investment opportunities. And also some of the drivers of this hike in prices, we had seen, in US, for example, the stimulus package that, Biden released, and even the 2 that he has already proposed had significant impact on increasing demand within US, for example. And what this happens is, as opposed to monetary policy, which usually favors, the richer class. This kind of fiscal stimulus, increasing government spending, usually favors the lower class to middle income class, just because, they have more money in their pockets, directly in their pockets, and most times, you don't see increased savings with that particular
There's more
group.
spending.
There's more of spending. So the marginal propensity to consume is more or less 100%. So we're seeing an increase or pent-up demand from about, the beginning of last year, and a reduction in supply, unfortunately. And
now, but having this, commodities rising now, it has some kind of implications on industries, perhaps,
yes,
that probably hike their prices, and that will eventually stoke inflation across the globe.
Yes, but when you're looking at, the individual companies, a lot of them would benefit from this, and more or less, they would increase, well, their net profits would more or less, increase as a result. And obviously, the short-term impact of that is the inflationary impact, but also on the longer term, by the time, they increase, their supply, costs are down, profits are going up, it's more likely to benefit, economies in the longer term.
All right, so still talking about the super cycle, what's the implication for Nigeria as it is now? Can Nigeria actually take advantage of this cycle?
So the key definition of what, analysts say about this super cycle is, a prolonged period of high demand and low supply. So the prolonged period is something, Nigeria needs to take advantage of. We are an agricultural, buoyant economy. And what this means is it's time for us to increase our supply. So we should even have, many more investors investing in some of our commodities within the economy, and investing in increasing supply within the economy. We're rich in cocoa and many other commodities within the economy, and all we've just always complained about is the lack of investment.
But with all the constraints we have,
unfortunately, the insecurity
right
issues.
Now,
yes, yes, and I'm sure the government is still working on that. We've had numerous news about the fact that this insecurity issue is not being solved, but I'm sure it's something. It's not something the private sector can actually, decide to solve. It's more or less a government, issue.
And talking about cocoa, I see that Australia and China are joining the production class. What does that mean for West African growers? So
what this means is, obviously, with Australia and China, it will still take some time before we see or feel the impact within the market. But it's a dangerous, game for Nigeria. We're already lacking behind Ivory Coast and Ghana. So what this means is, as much as Nigeria is still a marginal player within the market, it would have more detrimental impact on, the market share when you're looking at Ivory Coast, Ghana, and also the price. Who now has, who is now playing within the price of, cocoa? Who has more impact on the price is what, we'll be looking at.
So and now we're seeing that the price of cocoa slipping both in Nigeria and Cameroon.
Yeah, so Nigeria's problem is the fact that, the cocoa that was, produced within the past few months the quality had been extremely terrible. And what this means is, the bean count that is usually about 220, 250 grams is now about 190, which is not so great.
Yeah, but what must have contributed to that?
So they did mention, some of the cocoa farmers did mention, the weather as well as the fact that, we're not seeing great investments within that market. Farmers are struggling. I think they're just managing with, what they have at the moment, and that would obviously hinder quality.
So how much of impact do you think the insecurity challenges right now would actually, have, considering, cocoa is actually a big export for us.
It's Nigeria's major agri-commodity
and we're not even looking at processing it, because we'll actually gain more
from
if we can actually
the value
export,
chain.
Chocolates, for instance.
Well, exporting chocolates, I think
we should be thinking.
We should, because Ghana is there.
Yeah.
I remember the Ghanaian chocolate, but I think Nigeria is still far from that. We haven't even reached that level. The fact that we're struggling with what we're even producing.
Exactly.
The fact that the Western or the countries that we usually export to are denying some of these cocoa pods or cocoa beans that we're producing. So it starts from that channel, more or less what's happening happening in the farms. Thankfully, obviously, the insecurity and insurgency is mostly happening in the north. Most of, the cocoa producers are in the west, and, you have the Ogun, Ekiti, and we're not seeing a lot of, damage in that aspect. But I think the major impact on cocoa beans, or not, being what, some of these exporters need is, unfavorable weather, and the fact that, we're not, maybe, I think fertilizer is also a major important aspect as well, and obviously investment within that, sphere.
Meanwhile, we have Ivory Coast expected to boost cocoa and sugar production. What would this mean for Nigeria?
It's terrible because, Ivory Coast is a major player in the cocoa market, and now they, trying to expand their sugar. I think you had they mentioned about two companies that are trying to invest about over $200 million within between 2021 and 2025, and they're trying to boost sugar production. I think they're working on reducing the level of imports of sugar. I think the sugar production is expected to go from about 206,000 metric tons to about 255,000 metric tons, if this investment works, the right way. But what this means is other countries are moving ahead to expand, the agricultural base. Cocoa is one of the major export earnings for Ivory Coast, and I'm sure they're trying to diversify because of the uncertainty when it comes to the price of cocoa,
and especially to take advantage of this super cycle.
The super cycle that we mentioned, yes.
Well, Cameroon's cotton and Robusta coffee output is also increasing by an average of 4.5%. Are there lessons to learn, from these two countries when it comes to growing commodities?
I'm sure there are. What this would mean is, they are doing something right. I'm sure that, we can obviously learn from, first of all, I think their economic space, is favorable compared to what we're having in Nigeria. We're still struggling with government spending, funding. Those are major issues. Inflationary pressures, all of that do not create like a favorable atmosphere to boost, some of these of our agricultural products.
All right, let's look at oil commodity there. We've seen Brent price ramping up.
Yes.
Will the European countries planning to reopen borders for summer travel?
Yes.
And, of course, the U.S. Now, considering what's happening in India with the continued spike in COVID-19 cases, one would wonder how sustainable this price increases are. So
with the super cycle, talk as well, oil is not obviously left behind. We're obviously going to be seeing an increase in price of oil just because, OPEC has also, managed to curb or reduce or contain supply. But what we do expect is that, India would solve their problem with the increasing number of vaccines administered. We don't expect this, surge in India to last very long, we hope. It's not a great thing that is happening in India now, just because, most countries have already moved from that, angle of, this intense impact of COVID-19, and it seems like India is now lacking behind. And it's one of the major, contributors when it comes to demand for oil. But, the increasing travel...
And a major trading partner to
as
Nigeria.
well. Yes, yeah. But I'm sure, India is working, hard to make sure that they contain this, and I'm sure they'll pull out of it, effectively. But when you're looking at, the demand for oil, I'm certain that, with the travel impact, the use of jet fuel, that should, increase demand significantly because, it's hindered, demand when it comes to, because I think travel should contribute about 30 to 40% when it comes to, the demand for oil.
Yeah, but while some industry experts there in India are actually calling on the president to, declare a lockdown of the country in order to checkmate this, even though the president is not attuned to, going by this.
I'm sure that if the situation gets worse, the president will probably be looking into, this particular lockdown. But, usually from the trends we've seen with lockdowns, they only last between 2 weeks to a month. So we expect, that trend to carry on with India, I'm sure it's not favorable for them to, you know, keep their country locked down. I'm sure that's why the president is hesitant when it comes to, you know, reducing. But what this means is as soon as India picks up, the demand is going to, you know, skyrocket for sure.
All right, let's look at the domestic commodity prices with Ramadan still on. How are the prices looking right now?
Prices are still high. They remain elevated. You know, Ramadan is more or less now a luxury meal when it comes to, you know, looking at the domestic prices.
Yeah.
But we do expect that, you know, as time goes on, Ramadan is ending, I think, the end of this week. We should hopefully, although inflationary pressures will continue to build up, but we should hopefully see, you know, a reduction in the prices as soon as, you know, the Ramadan, you know, impact has been eliminated from, you know, domestic prices. Some prices remain stable. I think price of rice, price of beans are still stable, but others are, you know, picking up marginally, but not as...
Cement still on downtrend.
Well, yes. You know, we're seeing construction, road constructions
because of the rainy season?
The rainy season. Well, if the rainy season gets, you know, intense, then obviously there'll be a halt to, you know, some of these construction activities. But Nigeria is doing a good job when it comes to road construction. I've been seeing a lot of works, you know, that the state government is doing, Lagos in particular, when it comes to, you know, road construction. So,
okay, now as we enter a new month, and of course we're in a new week, what's the outlook for the commodities market, both oil commodity and agri-commodity?
For oil, we expect that oil still trades between about 67 to 68, at most $69 per barrel, except there's something significant happening in the market that, you know, pushes oil prices higher or lower. We don't expect lower, obviously, but with domestic commodity prices, no significant changes in the near term, but as soon as Ramadan is eliminated, we should expect to see, you know, prices taper down slightly.
All right, thank you very much, Bolanle.
Thank you for having me.
We hope to see you on Thursday.
Thank you.
Thank you.
Okay, we take a break, and when we come back, we look at the current trend in the Nigerian stock market. Keep it here with us. This is Business Morning. Nigerian stocks look unlikely to shake off their poor start to 2021 anytime soon, and that's according to most market analysts. According to them, investor preference for returns available in the local debt market is set to persist. What investment strategies are there for investors in the stock market? We have the president and chairman of Council, Chartered Institute of Stockbrokers, Olatunde Amolagbe, to discuss this and more with us. Thank you very much, Mr. Amolagbe, for joining us on the program.
Great
Good
to have you.
Thank you, guys.
Right.
Glad to be here.
You're welcome. So the stock market in Nigeria has been largely characterized by a lot of uncertainty over a long period. What would you attribute to this?
The stock market, by its very nature, is a market of confidence. So any individual events or sets of events that affects investors' confidence will always lead to instability, as you might call it. So for instance, the global financial meltdown of 2008, of course, impacted investors' confidence in a big way. And you see that while various governments have made efforts to build back that confidence, the results have varied from country to country. For instance, in Nigeria, you will see that the confidence have not really come back fully, especially on the side of the local investors. But we expect that with time, you know, that confidence will come back gradually. You see what the market did last year. That's, you know, for me, a light on, you know, at the end of the tunnel that the confidence is coming back with time. And then hopefully the stability will return with it.
All right, some observers believe that trading on the Nigerian Exchange Limited is largely influenced by the fixed income securities. How would you respond to that?
Empirically, on the short run, the performance of the equities market always have an inverse relationship with that of the fixed income yield. So when you see yields go up, you tend to see, you know, stock prices coming down. But long run, it's clear that, you know, the stock market tends to deliver better risk-adjusted returns than the fixed income market, especially in inflation-prone environment such as ours. So for long-term investors seeking risk-adjusted, inflation-adjusted returns, they're always better off staying in the stock market. It might mean, their investment horizon will have to be longer, but they are better off staying in the equities market if they are long-term investors and they are looking for inflation-adjusted returns.
Right, let me take you back to what you said about investors' confidence in the market. What for you is eroding confidence in the market at the moment?
It's a whole host of issues. Clearly, the shutdown and the COVID issues over the last, 1.5 years, if you will, has not helped, because clearly, if people don't feel that the organizations they are investing in are operating at capacity, chances are that they want to hold on to their investments because they are not sure what kind of returns is coming down the line. So you look at that. You also look at some of the structural and environmental issues in the country itself, because all of this, affect confidence. So if investors feel that there's a risk to their investment, then they will hold back. So a whole host of global and local issues affects confidence. And as those issues get worked out, and then investors feel more comfortable to start coming back and making savings and making investments again.
Now, what about the issues within quoted companies? I mean, last week we saw what happened, in First Bank, which created a lot of, panic and fears amongst both investors and even those that depositors who, bank with that particular bank. For you, stockbrokers, what did you make of that situation?
Those sort of situations do not help, clearly. They tend to send the wrong signals to the market. But the confidence we took from that is the fact that we had a regulator that responded appropriately and in time. Because, delaying response or inappropriate response could even have a more detrimental effect going forward. So we see a systemically important bank, and the regulator saw it that way and responded to ensure that, we do not have a situation where the situation deteriorates to the point where we have a run in the bank, because a run on a bank like a First Bank could very well lead to a run on other banks within the system. So the way we see it as stockbrokers is that the regulatory response was appropriate. All right, the right steps were taken. We know that the new managers are competent enough to be able to turn things around within the bank, and we feel that from here, we should be able to see growth, and we shouldn't see a situation where the situation spirals from where it is right now. So the appropriate steps have been taken, and we're comfortable with that.
All right, let's turn our attention to the CIS. Now, recently, the Chartered Institute of Stockbrokers issued a statement that has upgraded its certification process and procedures. Can you give us a background to this?
Prior to now, to become a securities and investment expert in Nigeria, you only get to take one of our exams, one omnibus exams. If you take that and you pass, then you become, a securities and investment expert. But we do realize that the global trend is specialization. So what the Institute has done is to adjust its schemes such that securities and investment experts can now start to seek to specialize too. So rather than become one omnibus security and investment expert, we could now have students specializing in specific areas of the industry. So we could have students specializing in equity dealing. We could have them specializing in fixed income dealing. We could have them specializing in commodities dealing and financial advisory, investment management, so that at the end of the day, the time it takes for them to qualify is shortened significantly. Secondly, it ensures that we're able to now have subject matter experts, so that you are looking for an equity, you are looking to invest in the equities market. You are able to go to somebody that is specialized in equity and is able to give you the kind of in-depth knowledge and advice you will need to be able to succeed in that market. Likewise, the financial market, the fixed income market, and all the other aspects of the securities and investment business.
What are the benefits of this new certification?
Yeah. As I mentioned earlier, firstly, it ensures that our students are able to complete their certification process in a much shorter time period. Secondly, at the end of the day, we end up with subject matter experts. So if you need to, for instance, as a financial journalist, needs to talk to somebody about the equities market, you now have subject matter experts that can speak to you, fluency about that market. The same way for financial advisory, the same way for investment management. So, so those are the people that are going to be operating in those different markets as different from having one person, spread over all those various aspects of the securities investment market. Not to say, of course, that even the students, the specialists, could not go all the way to become omnibus stockbrokers. But, I mean, now we have those sets of specialists in the different...
Online studies, any?
Yeah, we're already doing a lot of that. I mean, obviously, prior to the COVID issue, we've been an institute that had always valued technology and have always tended towards the use of technology in everything we do. We are one of the first professional institute in the country that started, computer-based testing for our students. And now, even our training, our tutorials are now delivered online. And soon enough, our exams could also be taken online, from wherever in the world you might be.
All right. Now, we're talking about, attracting investors into the Nigerian stock market, and then we've seen that foreign portfolio investors tend to be losing, a lot of interest in the Nigerian market. So, going forward, how can investors, particularly foreign investors, get back into the market?
Well, I don't know if I use the phrase losing interest, in the in the Nigerian capital market. You must understand that foreign investors are like the phrase says, investors. They are seeking alpha. They are seeking the best returns, the best risk-adjusted returns for their capital. And they will clearly go to the jurisdiction or the country that offers them the best of that, all right? So the country with the best structure, the best policy, prescriptions that ensures that they're able to get the best return. So if at any particular point in time, they are in a country that they feel, isn't matching up with all of that, they will tend to want to go to another country. I'll give an example. Last year, we had our neighbors to the west having monetary policies that's a little bit tighter than ours. So you see that their interest rate was a little bit higher than Nigeria, such that investors tend to tend towards that. But now that ours is also, our interest rate is also inching up, you could very well see that they tend towards the country again as we go forward. Every other thing being equal, of course.
Yeah,
all right, you go.
All right, we have the challenges of inflation rate, of course, which impacts negatively on the interest in the Nigerian market. So what are the options for investors at this time that we're having, galloping inflation?
Inflation is always a very challenging subject, especially if it's moving at the rate at which we are seeing it right now. And I will assume that the circumstances that is making it gallop the way it is now aren't what you will call normal. All right? But having said that, we as investment experts had always advised that in an high inflation environment, it is always better to seek more investment in equity because the empirical evidence supports the fact that equities tend to outperform inflation on the long run as compared to other asset classes such such as fixed income. So that is as much as I can say. My advice, of course, will be that as investors, we should be close to our stockbrokers, close to our investment advisors.
Always seek their advice, right?
And they
Like
will
we
be the
always
one
say,
to,
seek professional
yes,
advice.
Exactly.
Absolutely.
All right, what policy initiatives should the federal government put in place, at this point to deepen the Nigerian capital market?
Very good question. And quite frankly, this is the discussion we're having with the government and policymakers on a continuous basis, both at our national workshop and at our annual conference. And some of the policies they could put in place are actually quick wins, because some of the regulations are already, for instance, on the books. I'll give an example. There is already a law there that says that companies cannot trade or transfer shares. PLCs cannot trade or transfer shares except it is done via a recognized stock exchange. All right? So an exchange such as the NESD OTC is there for companies that are PLCs, to trade their shares. But unfortunately, we have not seen that particular law being enforced. At least it's not been enforced to the point, where we feel that more companies are now seeking registration with that exchange in order to transfer their shares. So if we see more enforcement of such, we will see, better participation in the market. Yeah. Of course, we've always also advised that privatization, commercialization that is being carried out by the government should, of course, be carried out on the stock market, because it's a win-win for all concerned. It will be a win-win for the government in terms of price discovery, and it will be a win-win for even the public, because they get to share the benefits of public enterprise that are now being taken private. So those are some of the discussions we keep having. Of course, I must mention the fact that we've on our part as CIS, we've also introduced an amendment to our Enabling Act in order to ensure that we are able to capture the securities and investment experts operating within the country, because we do not want a situation where we have people that are not registered professionals operating in the market, and they could end up doing things that are unethical, that hurts people, and everybody gets affected by that. So our hope is that the CSIM bill which we are proposing will get passed into law, get signed, and then capture the certification of securities and investment professional under that ambit, and ensure that the activities are regulated in order to build confidence.
All right. Thank you very much, Mr. Olatunde Amolabi, the chairman and president of Council Chartered Institute of Stockbrokers. Thank you very much. We do appreciate your time.
It's my pleasure to be here. Thank you.
Okay, trading resumes today after the public holiday. Let's get a sense of what last week was like and what to expect this new week. Ini, we saw some cherry picking of stocks because of some decent corporate earnings last week. We are in a new week and, of course, a new month. Should we keep our hopes high?
Yeah, well, good morning, Chimi. We sure should keep our hopes high, because the corporate earnings results season is still on. I mean, even up to this morning, MTN, Adova, they have released their own first quarter. And so we're expecting reaction from investors. Like your guest has discussed, investors are always looking for profit, looking for where to put their money and get returns. But let's just take you around some of the figures from last week. Yesterday was also today. We're going to give you a summary of what happened last week. The Osha Index was up 1.36% at 38,834. The equity cap was 20.847 trillion, and volume and value were lower compared to the other week, even though deals was up. The financial financial services sector was very active last week, but we saw more of sell-offs, because we see that it lost 2.09%. Consumer goods was down 0.02%. Industrial, insurance, and oil and gas did well. But we have Abdul Rashid Momo, the head capital TR TRW Stockbrokers, to give us his view on some of these figures that we see. Hello, Abdul Rashid Momo. Good morning. Hello, Abdul Rashid. Okay, we don't have him yet. Well, last week was very dramatic, especially for the financial sector. I remember this story with the FBN holding. That brought a lot of activities there. And like Chimi said, a lot of cherry picking took place there. In the unlisted market, the bond secondary markets remained bearish as investors continue to anticipate higher yields. The NSI was 789.89, it was up 0.60%. Market cap was 561.46 billion naira. That's on the unlisted securities. And then the volume was 55.08 million, valued at 1.46 billion naira. Deals 249 activities in the unlisted. In the federal government bonds, I mean, it's been kind of quiet recently, but we have some, some activities around, especially the 26th April 2049 auction, which had 11 deals. Totally, we had 34 deals, and then the value 17.54 billion naira. That's what took place. And, well, I think we have Abdul Rashid now. Hello, Abdul Rashid, are you there?
Yeah, I'm here. Thank you. Morning.
Okay.
Hello, I'm here.
I wonder what's happening today. Well, in the Treasury bills, we had the 14th April 2022, had 6 deals and valued at 5.44 billion naira. And then, okay, so Abdul Rashid, I think you can hear me. There are a lot of corporate earnings. Even this morning, we had Adova, MTN. What's your take since last week? We've had the market flooded with a lot of corporate earnings. What's your take? What's your observation in these figures that are being released?
Basically, most of these earnings are good for the market. We still expect a bull rally to actually happen this period of May. People are beginning to take positions in different shares, especially the banking sector, because you can still see renewed bull strength. Example, even the First Bank, upon all the issues they had, you can see a lot of buying power in the First Bank to date. What I would say is basically the market has a cycle. You must have heard the adage of the sell in May and go away, which normally happens in most markets. And our market is not actually, our market plays that same role, but we start to see weakness in markets from the months of June, July. So basically, this May might be one of the huge, highest rallies we are going to see for this year. We are going to see more of, we are going to see a lot of stocks move high this month.
All right. Thank you so much, Abdul Rashid Momo. He's the head capital market at TRW Stockbrokers, for sharing your thoughts with us this morning. Well, let's just finish up with the figures. NTB had 13 deals with valued at 11.78 billion naira, and then for the CBN bills for the 31st of May 2021, only 2 deals there, valued at 2.40 billion naira, a discount of 6.60. So, Chimi, those are the figures. Omo was a little bit active. Speaking to some analysts on the fixed income, we're expecting that the MPC meeting will bring some vibration into the market, because it's kind of a bit slow there.
That's coming later this month.
Yes, yes. But
well, I want to share the same optimism with Abdul Rashid there, even though, yes, that's saying selling me and go away. Hopefully we're going to see something different in him. Thank you. All right, we take a quick break, and when we come back, we do an opening call to London. Just stay with us. Well, it's the first trading day in London. Let's get update from there with Juliana. Good morning, Juliana. Welcome back from your holiday. Well, we have a slew of data releases to start off the new trading week and month. Manufacturing PMI, BOE consumer credit figures, and of course, mortgage approval and lending figures. What are these data saying, and what sticks out for investors?
Good morning, Chimese. Well, the FTSE opened pretty bright this morning, but it was boosted even higher after receiving pretty positive PMI data for manufacturing in the month of April. It's risen pretty sharply to 60.9. It was 58.7 in the month of March. So it just shows how much growth there has been in the manufacturing sector. This is the 11th consecutive month of growth in that sector and the highest PMI figure that they've read and recorded since July 2014. So it just shows you how great it is. A lot of this is down, of course, to the easing of lockdown restrictions. There has been a lot of pent-up demand. And, of course, because there have been so much bottlenecks with global supplies, a lot of people have been manufacturing within British borders. So this is a great sentiment. And because of that, the FTSE All-Share was boosted above that 7,000 mark, which it likes to get very quickly. Some of the also top risers are Lloyds Bank. That's the biggest riser on the FTSE 100. And the British Airways owner IAG, who are due to post their results later this week.
And the Prime Minister announced new trade and investment deals with India worth £1 billion, which is expected to create about 6,000 jobs. With India facing the worst COVID crisis, what is the future for UK-India trade?
Well, I would say pretty bright. That's what Prime Minister Boris Johnson will be hoping for anyway, especially as, of course, we're trying to forge these new relationships post-Brexit, India really being one of them. I think their bilateral trade at the moment is worth about $23 billion. And they're hoping with the signing of this new partnership, which is going to try and relieve some export barriers between both countries, will actually double the $23 billion by 2030. Prime Minister Boris Johnson should right now be in India, but he did have to cancel that trip, as you said, because of course they are the epicenter. They're at the epicenter of this COVID crisis right now. Though I do believe Prime Minister Boris Johnson has spoken to the Indian leader Narendra Modi earlier this morning, and signing this $1 billion trade deal for the private sector is a great news.
And G7 foreign ministers will meet in London later for their first face-to-face talks in more than 2 years. What's on the agenda for this meeting, and what is the expectation, of course, for the rest of the week?
Well, yeah, Britain is currently holding the rotating presidency of the G7 meeting. I believe the meeting with the world leaders will be taking place in Cornwall in July. So now we've got the foreign ministers meeting. They've already met. There's been lots of media spray images that are being splashed across the British media at the moment. Blinken, the US Secretary of State, has had a joint press conference with Dominic Raab, his British counterpart, and really what they're trying to forge is this strong international relationship in the midst of what they call existential threats. I know that Iran's name has been thrashed about alongside China and Russia. This is a very important gathering. As you said, it's the first face-to-face. I know that Australia, India, South Korea and South Africa have also all been invited. They'll also be talking about what's happening in Ethiopia with the Tigray community, as well as Myanmar and several other talks. It's going for a couple of days, so I'm sure I'll keep you updated throughout the week, Jimmy.
Absolutely. And of course, we're looking forward to hearing from you later this afternoon on our afternoon show. Okay, let's take a peep into the crypto market with Laddie Williams. Well, Laddie, Ethereum challenging Bitcoin dominance.
A lot of traders thinking at some point, Ethereum could flip Bitcoin, but that has never happened. I don't think that's going to happen anytime soon. Market cap $2.27 trillion, down about 0.09%. 24-hour volume $193.22 billion, up about 55.28%. Traded this morning, Bitcoin dominance 46.13%, down about 1.36%. Keep an eye on that dominance. Let's talk to Rume Ofi. Hello, Rume.
Good morning, Laddie.
Good morning, Rume. I see a lot of pullbacks in the altcoins market, and Bitcoin pullback to about 55,000 this morning. What's happening?
the market has to pull back for those that haven't bought their favorite coin to stack more bags, you know. So for me, it's an opportunity and also a discipline for traders not to overtrade, because when you overtrade, you have to experience some of those pullbacks. But when you're off the market, it's another opportunity again to make fresh profit, I tell you. All
right. What's your outlook for May?
May is actually a month that we're seeing that is correlating with a lot of pumps here and there. May 3rd, Ethereum broke past 3,000 and surpassed MasterCard, as we all know. Then also, Ethereum has been outperforming Bitcoin in a few past weeks now, making a total of 119% in the last 2 months. I think a lot is going to happen because Ethereum is an ecosystem. Although a few persons see Ethereum as money, but Ethereum is not money. It harbors a lot of new technologies, as well as old ones like DeFi, which is decentralized finance, NFTs, which is just here, and stable coins. Yeah.
All right, Rumi. Thank you so much. We'll keep an eye on that price to see how it goes. Thank you.
Thank you very much, Laddie.
Yeah, so this morning we had Dogecoin. Dogecoin is trending up by 14.71%. It's flipped Polkadot and now in the top alt by market cap. So, Chimmy, it's Doge this morning, really.
Yes, I saw someone on Twitter saying, you know, the greatest mistake I made is not putting more money in Dogecoin. Yeah. So I was wondering. So Doge is the coin to watch as it is, right?
Yeah, it's soaring really high. We don't know where it's going. Some traders believe it's going to $1, but you know how this market is, speculation.
But do you think it's the time to perhaps buy the coin?
Very risky for me. I'm not touching it.
All right, we'll continue to watch this market. And don't forget, this is not a financial advice. And if you must play in the market, seek professional advice, as always. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Laddie Williams. Thank you for watching.